While the intense headlines of 2025 have started to quiet down, the reality for over 1 million Canadian homeowners renewing this year remains a significant priority. We are officially in the middle of the renewal wall, and if you are among those transitioning from the low rates of 2021, the decisions you make in the next few months will define your household budget for the next several years. The good news is that with the right information and a proactive approach, this transition is completely manageable. Thanks for joining me on Whiteboard Wednesday. I'm Adrian Williams. For the last 20 years, I've been giving Ontario homeowners strategic mortgage advice, helping them navigate everything from purchasing their first home and standard renewals to complex debt consolidations and investment properties. My goal is to make sure your mortgage is structured for your long-term success, not just a low rate. It is March 2026, and we are at a critical crossroads. Many of your neighbors reset their mortgages last year, but for a large group of homeowners, the window is opening right now. While the market has stabilized, we still have a significant cohort, nearly 1/3 of all remaining low-rate mortgages, maturing this year. If you locked in a rate below 2% back in 2021, the reality gap between your current payment and today's market is something we need to address early. Even with the Bank of Canada holding their overnight steady at 2.25%, many families are finding they need to adjust their monthly spending to accommodate the new rate environment. Moving from a 1.5% rate to a 4% range is a meaningful shift, but it doesn't have to be a crisis if you understand the options available to you. The March 2026 market is actually showing signs of balance. For those of you on variable rates, we've seen a stabilization that's offering some much-needed breathing room. Our goal today is to look at how to optimize your position rather than just reacting to the bank's timeline. Here is your 4-step roadmap for the rest of 2026. Number 1, the 6-month rule. With the next Bank of Canada announcement coming on March 18th, timing is everything. We should review your current rate, your balance, and your potential options at least 6 months before your maturity date so you aren't rushed into a decision. Number 2, comparing your options. In this stable environment, different lenders are looking for different types of business. If you simply accept the first renewal offer that arrives in the mail, you may be missing out on terms and rates that are better suited to your specific goals. Number 3, strategic term selection. We are seeing many homeowners move toward 3-year fixed terms right now. It provides a solid middle ground of stability while keeping you positioned to take advantage of the market when it shifts again in a few years. Number 4, securing a rate hold. We can often secure a rate hold for you up to 120 days in advance. This acts as a safety net, protecting you from any unexpected market changes while we finalize your strategy. There are also a few important rules to keep in mind. First, the no stress test option. If you choose a straight renewal with your current lender, you generally don't have to requalify. If your career or income situation has changed recently, this is a very valuable path to keep in mind. Second, the refinance path. If you've accumulated high-interest debt over the last year, we can look at consolidating that into your mortgage. You will need to pass the stress test at the contract rate plus 2%, so we want to run those numbers early to confirm your eligibility. Third, the amortization adjustment. For many families, we are looking at extending the amortization back to 30 years. It's a practical way to lower your monthly obligation right now, giving your household budget some room to breathe while the economy continues to settle. Finally, 2 practical warnings. Avoid letting your mortgage auto-renew. If you miss the deadline, you could be moved into a high-rate open mortgage by default, which can be quite expensive. Also, keep an eye on your property's maintenance. In the current Ontario market, ensuring your home is in good repair gives us more leverage when presenting your file to alternative lenders for better rates. The 2026 Renewal Wall is a significant milestone, but it is ultimately a transition that can be navigated with the right plan. If your mortgage is maturing in the next 12 months, Let's start the conversation now. We'll build a roadmap that protects your home and keeps your financial goals on track.